We have Gurmeet Chadha joining in, Managing Partner and CIO at Complete Circle on our conversation this afternoon. Gurmeet, always a pleasure to have you on, and thank you so much for coming in. What do you think is the main concern for markets right now?
Yeah, I think obviously today's reaction is more to do with the social media interaction President Trump had, and I think we'll have to probably start living with it. Assuming we were to also get a good FTA, even then on a ad hoc basis, you can keep expecting tariff as an instrument to for negotiation, and I think at some point of time market will start discounting it as well. I think to me the bigger concern is the earnings not picking up the way it should, and I think once the earning picks up and comes into double digit, all of these issues automatically will be put to rest. Reason is, and the second, and once that happens, even the FI sell off will at least stop, if not flows come back, because if you see it's persistent selling, and it's been, if you remove couple of weeks in April and May, other than that last year or so, this is almost like a systematic withdrawal plan, without any trigger, 2,000 odd crores, and with trigger maybe 5, 6,000 crores per day. So I think the earnings need to come back, and I think the government also need to get urban consumption back. I'm a little disappointed in terms of measures not being taken in terms of GST cuts and some fiscal, stimulus, because RBI alone cannot do the heavy lifting. I think they've largely done what they could. Perhaps they'll do something more tomorrow, but some fiscal stimulus has to come from the government through large ordering, through some GST cuts. I think that is what is missing in the market.
Yeah, I don't know if there is a worry on the FIS situation as well before agreeing the dole-outs, because I think a large defense capex announced as well. So could that be interesting? Now, Gurmeet, just a follow-up before we take in the closing strategy from Gaurav, and which is around this earnings piece that you spoke about. Do you think the markets are pricing in a 5-6% earnings growth currently, or if it were to be a 5-6% earning growth year, then do you reckon that the market should be lower from 24,500 odd to maybe 24 or 23,500 or 23?
I think it's more, Neeraj, it's around high single digit, like 8% types, maybe 8.5, 9%. Anything less than that, maybe another 2, 3% can correct or time correct, which has been the case now for at least for this quarter. Also, if you see, Neeraj, if you divide that, you're at 21 times, let's say, and if you divide the earning at 7, you're at 3 peg. And historically, FIs haven't come at 3 peg. They've always come more closer to 2. Even price book, if you see, it's more closer to 2.5, 2.7 is when we see FI flows. So either earning needs to pick up or market needs to correct 10%, or the third scenario is time correction, which is what is playing out. But on technicals, for example, and I'm not a technical guy, I see a lot of pockets getting oversold. I see a lot of banks being oversold. I see a lot of defense stocks getting oversold because the lumpiness of the business. I also see even IT, to me, IT services looks way oversold to me. So there are few pockets in the market, and this will be a very grinding market. This is that fifth day of the test match, Neeraj. You need to preserve more right now and keep looking at opportunities. I've been saying this for a while. Have some long duration bonds, have some more gold also in the portfolio. This is a year, if you survive and even get high single digit or maybe early double digit, I think it's a job well done.
So, how do you get a high single digit at the very least? From viewers' point of view and from investors' point of view, they've been asked to manage expectations, I think, for a second year in a row now, pretty much. Almost a year, about 18 months odd. So now as the expectations are being even further managed, how do you even make that mark of a single high digit? What do you pick?
So I think, as I said, good stock selection in some part of the portfolio. Maybe you can be like a two-third, one-third between equity and fixed income and gold. If you see the 10-year right now, it's about 630, 640. My sense is the terminal repo rate would be closer to 5, which means about 50 to 75 bips softening of yield, which is there, which translates to almost 4-5% mark to market gain. So you can actually make double digit also in the long duration bond. I also think gold will find more favor with central banks with the way all these trade negotiations and bullying tactics are happening. I think US Treasuries, once you see sub 4 yields, there will be a lot of unwinding which will happen from the non-US investors as well, because a lot of them are sitting on accumulated losses on long duration US Treasuries. That money can flow back to gold and emerging market bonds. So I think if you be a little more balanced this year, I think you can still make that high single digit, or maybe if you're lucky, early double digit.
Okay, okay. Gurmeet, I want your take on fertilizers as well, but let me just get this report in from Varsha first. Fertilizer stocks have seen a sharp up move in today's trade, with counters such as Chumble, Coromandel, and RCF buzzing. Varsha is joining in to tell us why.
Well, thank you for that. So yes, all the many of the fertilizer stocks are buzzing now. This is on the back of volume, good volume we have seen in these stocks. Let me start with Chumble Fertilizers, wherein if you see the 30-day average volume stand at around 4x. Now this is followed by RCF, Fact, and Coromandel International. And let's talk about the how were the Q1 FY26 earnings for these fertilizer companies. Now we all know that we had a good monsoon this year, and these all fertilizer companies benefited from good monsoon in Q1. Starting with Chumble Fertilizers, if you see, they've seen an improved top line and healthy operating performance, and there was a better sales volume and price realizations. And if you see, the revenue was up 15%, margins were at 13% versus 15% last year, and net profit was up 22%. On the Coromandel International, if you see, the quarter for the company was very good. Now they did beat expectations. Strong operating leverage was seen from manufacturer phosphatics. If you see, revenue was up almost 50%, EBITDA was up 55%, net profit was up 62%, while margins were at 11% versus 10% last year. So overall, all these fertilizer stocks are actually buzzing based on volumes as of today.
Okay, thanks for that, Varsha. So, interesting movers that I couldn't find too many reasons, but Gaurav Bisa, any thoughts here on fertilizer stocks? I mean, if you like anything on the charts at all?
Yeah, many of the stocks had moved up already, and one of our favorites, have always been Chumble Fertilizer. For the simple reason that it has been an outperformer throughout. So if somebody want to probably nibble into that, I think Chumble Fertilizer is one that can be focused on. Look at the volumes for the last 3-4 days, above average volumes, and on the cusp of giving a consolidation breakout. The moment it sustains 570, I think the next hurdle would be at least 70% higher. So that will be one stock that would be on my radar.
Okay. And Gaurav, any sorry, okay, I'll come to you for your closing strategy, but Gurmeet, any thoughts on fertilizer stocks?
So Neeraj, we like Coromandel, and for a while now, almost 500 crore PAT in Q1. First time probably I saw 7,000 crore kind of a top line. Also continues to do strategic acquisitions. They increased their stake through the overseas subsidiary in the BMCC almost to 71%. They're also signing the DAP deal with Madden in terms of supplies from Saudi on diammonium phosphate basically, and a lot of backward integration also happening, and the company is really spending a lot of money in even R&D there. And I think the rural economy is showing very early signs of recovery. So a lot of the crop protection names, even some of the two-wheeler names, ancillary names, farm equipment names, water pumps, etc., I think will surprise in next couple of quarters.